Well, good day, everyone. Very happy to have you in attendance for this very special mini seminar slash workshop slash conversation. Like to welcome Simon Singer. Simon, how are you?
Pretty good, Bradley. How are you?
I am excellent, thanks, and on time and everything. We are happy to have you with us here today because we're going to spend a little over an hour together and talk about some very, very interesting topics. I am Brad Etheridge, the Chief Marketing Officer for the Center for Tax Strategies and Resources. For those of you that don't know about us yet, we are a very interesting group. We are all about helping advisors, planners, asset gatherers, CPAs, tax attorneys increase the performance of their practice and help grow their practice income through ideas and concepts and strategies and things that we believe help you to get in front of enough of the right kind of people under favorable conditions, that being primarily tax savings and tax saving strategies. We are going to leave a little bit of time at the end. If you have any questions, you'll be able to punch those in, and time permitting, we'll get to those. If not, we will respond to you individually. We are a membership-based group. We'll talk a little bit about that, and we have a exceptionally exciting academy coming up here very shortly, so we'll give you some information on that and let you know how you can apply to attend that event. At this point, I am going to turn over the mic to Simon Singer. He's the founder of the Center for Tax Strategies and Resources. For those of you that don't know Simon, he's been successfully in the financial services industry since 1966. He is in the top 1/10 of 1% of all producers in the U.S. and has been for several years. He's been a member of some very prominent organizations and groups in our industry, Advisors in Philanthropy, past president of the International Forum. He's written quite a few business bestsellers on the financial services industry, and he is the National Humanitarian Award winning recipient. He hates it when I say that, but I'm so proud of it, I got to bring it up every time I can. So with that, Simon, the mic is yours.
Thank you, Brad. Appreciate the kind words, and thanks to the audience for taking the time. I think this is going to be a really worthwhile hour and 15 minutes, because I think we're going to review some things that are dramatically going to help your practice, whether it be with us or not. I think you're going to have some fun with it. Here's what we're going to cover. We're going to cover a turnkey prospecting system for both a life annuity clients as well as retirement assets, how to create more net practice income for you, how tax reduction plans for small business owners can help reduce their taxes, which increases the budget that they have available to spend on the things that you sell. Tax savings and income enhancement for W-2 employees and retirees. Tax saving, which is really a process, it's not a product. How to create joint ventures with CPAs, tax attorneys, property and casualty agents, which is really centers of influence to help develop high quality engagements for yourselves and them. Which strategy to use, why and how. We all kind of know what the strategies are: charitable remainder trust, charitable lead trust, pension plans, captive insurance companies, etc. But sometimes it gets kind of foggy as to which strategy to use, and then how do you become or develop the level of expertise, and why should you use it and how should you engage it, and we'll talk a little bit about that. Access to resources with experts to help implement. We have over 20 incredibly high-level tax attorneys, CPAs, and producers. We don't have them on salary, but we have them as part of our permanent faculty, and they're designed to help educate you and help bring you to the table with more and greater value. How to increase net after-tax income from qualified plans, profit-sharing plans, defined benefit plans, cash balance plans, or IRAs. How to reduce taxes on retirement plan and IRA distributions, how you can turn retirement plan assets into estate and income tax-free assets. So what is the center? As Brad said earlier, we're an organization that basically trains, mentors, collaborates, markets, provides access to resources, and delivers prospects. We'll talk a little bit about how we're going to do that in a second. So building teams, using the phrase strategic planning teams by using our resources, makes you bigger out there. It makes you more than you are by yourself or alone. So if you'll let us help, we can make a big difference. If you're making 150,000 a year now, with relative ease, we can increase that to 300,000. If you're making 250,000 now, we can probably get you up to 500,000. We don't have a horse in the race. You don't have to change who you're doing your insurance or annuity business with. Keep your contracts. You don't have to change your broker dealer. You don't have to do joint cases with us. As Brad said, it's a training and mentoring program, and it's kind of like my desire to give back to an industry that I've been in now for 55 years, to help the industry elevate itself, because we've had some damage done to us in the last few years, both by Congress and by producers. And the main purpose of this webinar is to give you a 40,000-foot view of what's going to happen at the Center's Live Academy, which is February 9th through 11th, 8 a.m. to 5 a.m. on the first 2 days, 8 a.m. to 4 p.m. on the last day in Orlando, Florida. Time, sometimes we tend to run a little bit long, but we ended on the last day to give people who need to get on a plane and get back time to do so. Here's what I think the industry's two biggest problems are. So I've been a member of Top of the Table for 37 years. That's one of the highest levels of productivity. Been a member of the the Forum 400 for the last 20 years, past president and CEO of that organization. The two biggest problems that our industry has is marketing and mentoring. I will tell you, marketing, where's our next case going to come from, is huge. None of us really knows where the next case is coming from. So we're all searching for ways to come up with where's the next prospect coming from. And mentoring, I will tell you that both as an athlete, an entertainer, and somebody in the financial services business, I would have achieved maybe 50% of what I've been fortunate enough to retrieve without high-level mentoring from people who were accomplishing a level that I wanted to aspire to. So let's first talk about marketing. Let's assume you're at a party and somebody asks you what you do for a living. How do you answer that question without developing commission breath? What do you say? Products and strategies are great, but you don't get to present them until you have somebody to talk to. So you've got 5 seconds to get 5 minutes to get 50 minutes. That's really important to understand. 5 seconds to get 5 minutes to get 50 minutes. If what you say in the first 5 seconds doesn't move them, then you don't get the 5 minutes. And if you don't get the 5 minutes, you don't have a chance of getting the 50 minutes, which is the appointment. So we'll talk a little bit about that. So you've got 3 choices how you can respond. You could say something like, I'm a sophisticated investment advisor, and we have the best investment platform in the industry. Or you could say, I specialize in helping people to create effective estate plans that minimize the estate tax. And what the client hears is blah, 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 because they've heard it before. They hear it from their stockbroker, they hear it from their insurance agent. What they don't do is they don't hear it from their CPA. Or you could say, I assist successful business owners and entrepreneurs in reducing unnecessary income, capital gains, and estate tax. That's going to grab some attention, because once you get them to talk, you have something meaningful. You have to have something meaningful to say. It's not perfect, but it is significantly better than the other 2 alternatives. So let's see where we go from here. So the key is access. Access is to talk about things that nobody else is talking about, and that's taxes. And we're saying danger. Taxes are increasing. Taxes are going to increase. We've been mentoring people on how to talk about taxes now for the last 6 years formally, and I've been doing it for the last 20 years. Let me show you a graphic. The wealthy, your client or your prospect, are under attack. In 1980, the top 10% of the wage earners in the country paid 49% of the taxes. In 1990, the top 10% was paid 55% of the taxes. And currently, the top 10% of the wage earners pay 71% of the taxes. And we all know the taxes are ready to be increased. So this is an interesting little graphic. Where are taxes headed? Well, during World War II and even into the 60s, the taxes were in excess of 90%. Now, yes, there was a platform fee where you had to earn an amount of income over and above that, but taxes dropped precipitously under Reagan, and now they're slowly edging up again. Right now, we're at a federal rate of 37%. Biden's already said it's going to 39%, but it's going to go higher. In the state of California, even at the 37% rate, the highest tax rate including state, we're at about 51, 52%. The average tax rate between 1913 and 2020 was 57% federal plus whatever you've got as a state income tax. And when Trump came in, he was able to justify some of his deductions, mostly for the wealthy, by saying you can no longer deduct more than $10,000 in state income tax and property tax. Well, in the state of California, that's a mortgage payment. That's a 1-month mortgage payment. So effectively, our state income tax is no longer deductible against the Fed. So do you think it's possible that changes in Congress, the executive office might suggest that taxes will go up again and again and again? We now have a $28.9 trillion national debt. However, there's also been a bill that Congress passed that's going to raise the debt to $31 trillion through 2023, and it's going to continue. Okay, let's discuss how to make money grow and just how important saving taxes is. So let's talk about a subject we call uninterrupted compounding. If you take $1 and double it every year for 20 years, so effectively you're making 100%. If you took $1 and double it every year for 20 years, how much money do you think you're going to end up with at the end of the 20 years? Well, without you doing the math, I'll do it for you. The answer is it'll be worth $1 million, almost $50,000. Now, what if we do, and here's the graphic that shows how that happens. Now you do exactly the same exercise, double $1 every year for 20 years, only this time, every time you make 100%, you're going to subtract 35% for taxes each and every year. So how much do you think you're now going to end up with at the end of 20 years? Well, the answer is $22,370. And if you're good with a financial calculator, you can run it yourself. That's $977,000 of unnecessary tax. If you learn how to understand and communicate this story, you're going to have an unlimited number of people to talk to. Here's the graphic on that. $1 of interest, you lose 35 cents in tax. At the end of the year, you got $1.65. All right, so how can you reduce taxes for small business? Well, one of our tools is something called tax reduction plan that's done by one of our tax attorneys that we have as resources. So to learn more about tax reduction, you can join us at the Center's Live Academy, February 9 through 11. If you want more information on that, you can dial 877-258-2837. When we get to the end, we'll tell you what the pricing is. It's in Orlando, Florida at the Hyatt. This is our superstar faculty, from Harlan Acola, who's a national expert on reverse mortgages, to Ken Buckley for a premium finance expert, the likes of which I don't think anybody on this call has ever seen. Curtis Cloak, who's a preeminent expert in maximizing retirement cash flow. Vince Dodonna, who's the all-time production leader with Guardian Life. Walt Dallas, who's the tax attorney with a master's in tax, doing the tax reduction plan for us. One of the speakers, Brian Edelman, is a computer security pioneer. He's been doing it for 25 years. He's going to tell us what your risks are and how you can avoid them. Brad's going to be speaking. He's done over 400 doctor seminars. Bruce Gibner is a nationally recognized tax attorney on tax strategies for the wealthy. David Grusner, who's a national sales channel and lead generation expert. Ricky J will talk about ESOPs. You're not going to run into the opportunities very often, but when you do, they're very, very profitable. Kevin Jerry's got a Master of Science in Taxation and a partner of tangible property tax methods. It's a way to be able to develop significantly more tax savings from property that people own than what they're currently doing. Kevin Knebel is a national expert in utilizing the power of social media. We actually hired Kevin ourselves. Jason Kirshner, who's the founder of Sage Consulting, got a national presence, does some planning for one of the major religions in this country as well. Jerry Minardi is the co-founder and managing partner of Selling Technologies. They are a video marketing pioneer. David Nesty, who's a chairman emeritus of Prager Metis, which is a national and international accounting firm. Kate Oberlig is a national marketing guru. Mark Pace, he's got a couple of firms. He's a national expert in life insurance policy management as opposed to churning policies, meaning replacing them. He's also got a great program for obtaining referrals and turning them into the clients, which I found very unusual. We hired him as well. I've never written a single case on a referral from one client to the next. Dr. Vicki Rackner is the advisor board chair for the Doctors Academy of Economics, talking about how to gain doctors as clients. I'll be talking a little bit. Ed Slott is going to be at our meeting in Orlando. He's a financial expert, author, and public speaker, providing training in IRAs and retirement distribution planning. I think his name probably speaks for itself. Joe Straszari, who's a nationally recognized tax attorney and creator of the Southern California Institute's Laureate Program, which is a think tank for CPAs and attorneys and financial planners. John Wheeler is a member of the American College faculty on retirement planning. Dan Zeppelin has got a unique senior settlement platform specialized in increasing efficiency for clients. The kind of things he's been able to do for some of our members have been kind of amazing. That's just a taste. So let's go into marketing a little bit. How do you find a client? That's always the next thing. How do you find? So who do you talk to? Well, you can start with your existing client base, because we're going to give you some tools, some methods, and some strategies to go back and re-engage with those clients. It could be existing prospects and expanding that prospect list or expanding the conversation. It could be wealthy people and business owners that want to pay less tax. Think about that concept. Nobody wants to talk about buying annuities. Nobody wants to talk about life insurance. And nobody believes anybody talking about how they can increase their yield and investment portfolio. But everybody wants to talk about paying less tax. The problem is they're going to think that their CPA, if they know something that would help them do that, will pick up the phone and call them. So you might ask them, when's the last time you got that call from your CPA with an idea to help reduce your tax? The answer is always never. Owners of qualified retirement plans, doctors and dentists, property and casualty agents, CPA practices. Only this time you're going to talk to them with new tools, new words, new conversations as a means to re-engage and expand the existing engagement. So how do you open the conversation? Here's some questions that you might use. What's your largest expense? They might say my property tax. They might say my spousal support or my child support. But the reality is we can get them around to saying, you're right. My largest expense is actually the taxes that I have to pay each and every year on my investment, on my earned income, on my unearned income. Do you believe the taxes are going to be higher or lower in the future? What is your plan to minimize this tax damage? What plans do you have to create tax-free income during retirement? Is your retirement plan self-completing if you become disabled or you pass away? What do I do? Well, I help business owners and entrepreneurs reduce or eliminate unnecessary taxes that they're already paying. So the response to that is going to be, oh, you're a CPA? And my answer is going to be no. Actually, I'm a member of an organization that helps to train CPAs how to do those for their clients. You must begin with the end in mind. So for instance, there are ways to set up huge pension plans with as much as $1 million contributions per year and automatically sell life insurance policies and gather assets under management. And there's a potential to include post-retirement medical care as well. You have to learn how to do zero tax planning for high net worth clients. It's easy enough to do for somebody making $50,000, $60,000, $70,000, but how do you do it with high net worth clients? And we're not ignoring middle America, because we have plenty of expertise and mentoring for the middle America client. But learning how to do zero tax planning for high net worth clients, if you can do it for them, you can do it for anybody. Learn the language needed to engage clients without talking about products. Premium financing the way it should be done, meaning that I don't have to worry about whether interest rates go up. I don't have to worry about whether the yield on my insurance policy is not what was originally illustrated. There are ways to be able to handle that without increasing the risk to the client. How to create $2.2 million in tax deductions each and every year for business owners with the blessing of Uncle Sam, while simultaneously gathering larger assets for management. Learn about a system to automatically add assets each and every year without looking for new clients. How to recapture previously paid taxes. It's an interesting conversation that one of our speakers will be talking about in Orlando. How to create relationships with professional advisors, CPAs, attorneys, etc. There is a psychological hurdle that needs to be overcome, and I believe we've got the key to do that. So what's the process for success? There is a process. When I became a very successful athlete, I didn't realize that there was a process. And the process is almost exactly the same in financial services or pretty much every business. You first have to have proper mentoring. I was very fortunate, both in athletics and in this business, to have really some great mentors. You must have resources. In other words, I used to try to pretend that I was the smartest guy in the room, and the only one who believed me was me. The client didn't, the professional advisor didn't. That's why we created this nest of resources, professional and otherwise, to help us gain credibility. The CPA tends to look down on people in our industry. They tend to look up at tax attorneys. So I try to have involve a tax attorney in every single one of the cases I'm in, so that we don't have the issues with the CPA. I sit on the shoulders of the tax attorney. I get reflected credibility. Proper discovery. It needs to be conversational. It's not just assets and liabilities. It's not numbers on a page. It's what's in between the lines, not what's on the lines. How to get prioritized, signed off goals and objectives. This is a major play that our industry has forgotten about, that they used to have when I started, but goals and objectives is what motivates people. Not the dollars, but what is it they'd really like to accomplish if they only knew that they could. Create strategic planning teams. That would include the client and anybody that's important to the decision-making process for the client. It would include his CPA, it would include his attorney, it would include his brother-in-law who happens to have an insurance license but doesn't even know how to spell insurance. You want to get as many people on your side of the table as possible so that the client has confidence in what is being proposed. And if you do this correctly, you'll find that the client will implement, because when he goes to ask somebody else what their opinion is, you'll have some control over who that somebody else is. How to attach strategies to the recognized goals and objectives that the client gave us up here. In other words, if we just lead with a solution to a yet unrecognized goal and objective, it's not going to go anyplace. But if the client would say, boy, you know, I really would like to be able to fill in the blank, and you have strategies and attach them to the goals and objectives, you will find your closing rate is much larger, and your sale, whatever it might be, is also much larger. So here's some of the top strategies that can benefit your client and increase your revenue. Number one, creating qualified retirement plans. That does not mean 401k plans. That does not mean profit sharing plans, although they might be inclusive in a cash balance or a defined benefit pension plan. How to reduce the tax liens on qualified plans or IRAs when people take distributions. I see people all the time who fill out financial statements, and when the financial statement asks how much do you have in your retirement plans, they'll put down a number. Let's say that number is $1 million. Well, the problem is they don't get to spend $1 million. In today's world, they only get to spend the after-tax amount. So if they've got $1 million in the plan and they've got 40% tax rate, they only get to spend $600,000. So the tax lien is that extra $400,000 of taxes. And there's taxed at 3 levels. The first level is the annual distribution, required minimum distributions, you might call them. That adds up to a huge number. The annual distributions from 65 to age 100 gets to be gigantic. And what even gets more gigantic is the amount of earnings that they're forfeiting that could be being earned if they didn't have to pay those taxes on the distribution. Well, we can't eliminate taxes completely, but we can make a really significant dent. The second one is when they pass away, there's something called income in respect of a decedent, which is a death income tax on their final tax return. And then lastly, if they happen to be in a situation where they have estate taxes, and right now that's $23,400,000 between husband and wife is exempt. Everything above that gets estate taxed as well. But January 1st, 2026, that number is going to drop to $6 million each, or $12 million as opposed to $23,400,000. So a lot of your prospective clients, a lot of your clients who aren't in an estate tax situation today will definitely be tomorrow. And I would strongly suggest that with the current administration and the current configuration of Congress, that you're going to see the tax rate's going to go up. Instead of 40, it's probably going to go to 50 or 55. And the exemption is likely going to drop to $1 million each, not $6 million each. That's not going to be tomorrow, but that's going to be in the next few decades. Qualified plan conversion to Roth IRAs, how to minimize the out-of-pocket cost for taxes on that transfer. How to maximize after-tax income from pension plans. How to create advanced defined benefit plans that will automatically produce assets under management, the sale of life insurance and annuities. Exit strategies for defined benefit plans, profit sharing plans, and IRAs. Exit plan for business owners, how to minimize the long-term capital gains on the sale of any kind of appreciated asset. how to utilize Section 199A, which is that 20% reduction in income that came out of that Trump tax law in 2017, how to use either S Corp, C Corp, or sometimes maybe even both. Here's some tax strategies continued. How to reduce personal and corporate tax to increase net after tax cash flow, using tax savings to produce tax-free income. How to do backdoor Roth conversions no matter what your income is. How to make self-completing Roth alternatives. Charitable trusts and pooled income funds, large deductions to help fund your Roth conversions. 529 alternatives, 401k alternatives. There's an interesting methodology here. Once people understand what the pluses and the minuses are with normal 529 or 401ks, you might find that you're able to convert them to expand your practice. A little bit more about mentoring and educational resources. We provide access to the most creative and successful tax attorneys, CPAs, and financial planners in the industry, whose assignment is to work with you, educate you, and make you more successful. That's not a bad agenda. One of those, here's the Southern California Institute Academy homepage. They've got hundreds, if not thousands, of courses and events and quick start videos. In financial, legal, estate, long-term care, business, real estate, and tax professionals become members of SCI to acquire access to hundreds and hundreds of digital and live educational events, programs with legal and financial subject experts, high-level technical and practice management education and certification programs for legal and financial professionals, event partnering and management, a resource center for members, groups, and faculty to search and connect with each other. We've been able to create a very significant discount, about 30% for members of the Center for Tax Strategies. So here's some tools and access to the middle market, consumer content, branded videos, brand identity package. You can get access to these without cost. Multi-environment workshops, including life and annuity topics, book programs that attract qualified prospects, scripting of presentations, all branding, graphic design, and custom studio produced video resources is included. Let's see what else we got. Patrick Kelly Marketing Program. Patrick Kelly is a nationally recognized author, and that program includes, let me go back. The Patrick Kelly program includes webinars and seminar materials, all branded to you, not to us. Let's see, product information, sales tools, brochures, everything that's done for you, just like it says up here. One of the marketing programs is the Truth About Annuities. Another one is Maximizing Social Security. Another one is the Principles of Retirement Plans. And then we've got PowerPoint slides, slide handouts, and personalized client presentation in the personal needs arena, in the retirement needs arena. As you can see, stretch IRAs, IRA rollovers, IRA reviews, split annuities, immediate income reviews. These all have presentations and handouts and client presentations for them. Estate and charitable planning, which includes all these items you see, a lesson in charitable giving, charitable trust reviews, planning for children with special needs, life insurance and irrevocable trust, charitable gifts of life insurance, cross-purchase, buy, sell, stock redemption plans, for partnerships, for sole proprietors, for corporations, 303 stock redemption plans, seminars, handouts, slide presentations for all of these, business protection planning, key employee indemnification, business loan insurance, business overhead expenses. You can review these on your own, but it also includes employee benefit planning. I don't know anybody that even remotely has these kind of things available. If you want to learn more about marketing, you can join us at the Center's Live Academy. It's February 9th and 11th in Orlando, Florida. If you want more information, it's 877-258-2837, and we'll give you some more information on it in a bit. So how about mentoring for the upscale market? We talked about mentoring for the middle market, mentoring for the upscale market. You can be trained in the sophisticated areas of the tax law if you want to be, that only proactive CPAs and tax attorneys know about, or you can use our experts. So you'll get training to be able to try and do it on your own. I would strongly suggest that you not do it on your own. I bring a tax attorney or a CPA along with me on every single case I do, because I know that the client is going to go ask somebody their opinion about the things that we've talked about. So I want to have instantaneous and implied credibility. You can break into the doctor and dentist market. Our strategic partner is a 30-year surgeon, and she can train you what to do, and more importantly, what not to do, and what the resources are. You can market to business and property and casualty firm with customized videos and documents in order to generate interest. All of our training and mentoring comes from CPAs, tax attorneys, top of the table, and 400 forum 400 members, sorry. If you open the door, we can help you close it. Charitable planning, using the right words in order to generate interest. Let me give you an example. If you start mentioning charitable planning to people, the problem is, and you will always get these kind of recognized statements, charity begins at home. You know, I've already given at the office. But if you talk about what something does as opposed to what it's called, you might find you generate interest. For instance, you could talk about a charitable remainder trust in conjunction with a family foundation, a life insurance policy, and an irrevocable trust. But let me tell you what's wrong with those words. Charity means I have to give things away. If I give things away, it means I'm poor. If I give things away, I mean I lose control. Irrevocable means I can't change my mind. Life insurance means I have to die to win. And irrevocable means that there's no way out. So let's talk about this instead. Instead, I might say, are you aware that capital gains taxes are voluntary? Are you aware that estate taxes are voluntary? Are you aware that if you voluntarily opted out of capital gains tax and estate tax, the government will actually give you a current income tax deduction today just for opting out of those other two taxes? And I'm not done yet. From there on in, if you set those buckets up correctly, you're going to be able to invest and reinvest under your dictatorial control any way you want to invest the money, and you will never pay taxes on those gains again. You'll be able to draw out as little or as much income as you would like. You'll pay taxes on the income. You could actually even become a multi-million-dollar philanthropist, supporting numerous worthwhile activities under the dictatorial control of your family in perpetuity, and do it without disinheriting your children. Were you aware of that? Now, what I just described was a charitable remainder unit trust, a family foundation, a life insurance policy, and an irrevocable trust. But I didn't use words that caused people to retract and not want to continue the conversation. I want them to say, wow, that's really interesting. How would you do that? There's ways to have the conversation, to use words that people will accept as opposed to what people won't accept. And if they like the results of something, there's plenty of time for them to do the necessary due diligence. Understanding the psychology of the engagement. That's kind of what I just reviewed. Learn why top of the table producers produce 10 and even 100 times more than your revenue. Trust me, we aren't 100 times smarter, and certainly don't work 100 times harder than you do. So it's always the intangibles, because we all have the same product, we all have the same taxes, we all have the same tax law and the same strategies. So that why this difference in result? It is the intangibles, it's not the tangibles. Learn why you're not able to create relationships and get referrals from professional advisors, CPAs and attorney. Our CPAs and attorneys are going to tell you why you can't and what you have to change in order to make things more meaningful for yourself. There's an old Rudyard Kipling expression that says the strength of the wolf is in the pack and the strength of the pack is in the wolf. So I'm the wolf. I get strength and power by being involved and surrounding myself with eminently successful people, and that's what we have at the center. So once again, here's a look at the superstar faculty. We don't need to get through it again. You can see the quality and the depth of our faculty. There's, I think, 24 faculty members. Non-efficient logic versus efficient logic. This is really interesting. We spent a lot of time talking about timing, combining, and sequencing. How you time, combine, and sequence, how you invest, how you take distributions, where you take distributions from, can make a meaningful result. And this little example here is going to share with you. Now, this is a summary that comes from software that we get from Insmark. It's called Wealthy and Wise, but it's how we use it and how we illustrate it, because there's algorithms in this software that will decide which asset, in which time, and in what amount can provide maximum to charity, maximum to heirs, maximum income for our clients. So let's take a look at what happens here. I think you'll find this very intriguing. Here are the assumptions. that we want to provide annual after-tax cash flow of $200,000 a year after taxes indexed for inflation at 3%. Their current ages are 65 and 60. Their life expectancy is 93 and 88. Their net worth is currently $6.4 million. You need to trust me on this. The tax brackets, the yields, the turnover rates are unchanged in each and every scenario. So let's look at the first scenario. The first one, we're calling this non-efficient. This is current what they're doing. If they keep investing exactly the same way as they are, and by the way, the software will show you what the various investment yields are, but they're the same in every scenario. The 6.4 million after taking out 200,000 indexed for inflation net after taxes is going to be worth $12,200,000. The transfer taxes is a little over $616,000. The net to heirs is 11,600,000, and the cumulative income they've taken over that 25-year time period is $8,500,000. Now, all we're doing is letting the software solve for which asset should we access at what time and in what amount in order to increase the money to heirs. No difference in cash flow. It's still $8,500,000 over here. The estate would have grown to $18,800,000. The taxes, because it's larger, we haven't done any planning, is $4,200,000. The net to heirs is 14 versus 11 million, $3 million increase. No money goes to charity. 8,500,000 net income to mom and dad. Now let's say, what if we don't care about how much goes to the kids? I want to spend more money. Well, if I want to spend more money, I could bump this up to 10,500,000 or 2 million more, and the estate still grew to 13 million, more than 12. The taxes would go up 2,300,000. The net to the heirs is still roughly the same, 11,300,000, and mom and dad got $2 million more to spend. Now let's start to do a little bit of planning. We're going to make some gifts of about $60,000 a year for life insurance. The estate would have gone to 13 million as opposed to 18 million, as opposed to 12. The taxes are 2,900,000. The net to the heirs is 18 million. Mom and dad still get to spend 10,700,000. And then lastly, let's do a little bit of philanthropy, which is nothing more than making a testamentary gift of our IRA or our profit sharing plan, and still bought some life insurance. The estate grew to 15 million. The transfer taxes were 600,000. The heirs received 15,700,000. Charity got 4,400,000 as opposed to 0 in all the rest of the scenarios, and mom and dad still got roughly $10 million of cash flow. I will tell you, I have made this available to CPAs, charged them $1,500. They have grossed it up and charged the client $7,500 in order to be able to go through, because there's about 26 pages of documentation in each and every one of these scenarios. Okay, you can acquire doctor and dentist clients. Dr. Vicki Rackner has now written 6 books. She's got chapters in another 5, and you'll see she's been quoted in just about every financial and non-financial journal that we have in the industry. She's the head of our advisory board for the Doctors Academy of Economics. She'll be at our meeting in Orlando, Florida. You can talk to her directly, but she's going to make a couple of presentations. She gives some very, very interesting insight into how doctors think and how they process information and how they make decisions. So how do you create strategic alliances with CPA firms, tax attorneys, property and casualty companies, or people that do assets under management or RIAs? Let's talk about a strategic alliance with a CPA group. Everybody talks about it. Very few are successful at it. Almost nobody has the keys. And we have the knowledge, the experience. We actually have some very interesting software and the success. This is where 95% of my business has come from for the last 25 years. So there is a method, there's a style, and here's the psychology of working with CPAs. First of all, you must be well introduced. That could be from a client, that it could be from a professional advisor. Typically, I market to the tax attorney, who then refers me to his referral sources, the major one being CPA firms. You need to interview them as to talking to them about how great you are. You need to share with them the tools and techniques to help them realize what's in it for them. We need to find out what they do, and more importantly, what they don't do. I don't want them coming back a month later and say, oh, I do that. It might be the creation of a 5,500 for a profit sharing plan, or the administration thereof. I want to know what they do and what they don't do so I can fill in the gaps. What's working for them? What's missing? Have they achieved the success that they thought they were going to achieve when they first went into the accounting business? Don't talk about yourself. Now, we've got a pyramid of success. In order to review each and every one of these, it would take about an hour per block, but suffice to say that you need to profile the advisor, you need to be well introduced, you need to set the rules, you need to control the controllables, you need to draw your line in the sand, meaning telling them not only what you do, but what you don't do. You need to interview them, find out what's important to them. You need to know the tax law, know your product, and more importantly, value what you do. Because if you don't value what you do, trust me, your prospect and the strategic alliance partner isn't going to. You need to be patient with them because they're not used to the kind of style that we have. You need to be a good teammate and create engagements and profile the client and be a problem solver and define what's in it for them. All are incredibly important. What do you say when a CPA asks you, what type of client are you looking for? I hate that question because it could be somebody that makes $200,000 and has discretionary income of $100,000. It could be somebody that generates $1,500,000 a year and doesn't have any surplus money. So it could be net worth, it could be discretionary cash flow, it could be too much in the way of taxes. We got to be careful because now we run the risk of stepping on their toes and making them look bad versus elevating them in the client's eyes and making them more important and making them more profitable. So we created something called Facts, Opportunities, Results, our 4 programs. And we have a table. We do pension and IRA enhancement plans, investment alternatives, investment income plans, tax and retirement for small business, large owner tax and retirement plans, leveraged estate plan, terminally ill estate tax plans, zero estate tax plans, highly compensated employee tax plans. I'm going to show you a sample, one of them, the pension and IRA enhancement plan, to show you the style and the format that we utilize when the CPA says, what kind of client are you looking for? So here were the facts. A couple in their mid-60s with $2.5 million in an IRA rollover account, the income of which they would never need. Their total net worth was $10 million, and they want to maximize the amount of money to heirs without risk and without invading their current lifestyle. Now, the tax numbers you're going to see are flawed because I put this together probably 15 years ago when tax rates, especially estate tax rates, were lower. But I want to show you what the style is because what the exact numbers is not relevant. So here was the opportunity. These extremely conservative investors were highly disturbed when they discovered that after income in respect of the decedent and estate taxes, that their $2,500,000 IRA would only be worth $750,000 net to their heirs. So the results, with collaboration and creative planning, gave us the opportunity to substantially reduce the income tax while eliminating the estate tax altogether. The result was $2,400,000 was now available to the heirs without any further tax dilution, as opposed to $750,000. $1,550,000 of taxes saved, and $80,000 additional revenue to our strategic partner. That's the way we present pension IRA enhancement, because then I would have a conversation to the CPA and, how many people in your practice do you think fit this criteria? He says maybe 10. And out of those 10, how many of them do you think would be interested in hearing about how to reduce the taxes by about 3/4? And he said, well, I got maybe 7. And out of those 7, which 3 do you think would be most likely to follow your recommendation if we did it in tandem and you believe that what I'm telling you is valid? He said, well, probably 3. I said, well, I'll tell you what, why don't we run a little beta test program? Let's pick up the phone, let's call those 3, let's set an appointment with them, and let's you and I and the husband and wife sit and talk together. Let me tell you what's going to happen. What's going to happen is in 6 months, 2 of those 3 are going to become mutual clients between yours and ours, and each one's going to develop between 25 and 100,000 of additional revenue to your firm. It'll give you a chance to see how we work. I want you to pick some people where no matter what we did, we couldn't negatively affect your relationship, just as a little test, and then you can decide whether you want to move further. In relatively short order, or after 5 or 10 cases that we do jointly, you'll know most everything that I know. You'll be able to do it on your own. If you want us to be in the background to help, we'll do so. That's the way to talk to a CPA. They need to know what's in it for them. They won't admit it, but I'm telling you right now, that is the key. So to learn more about working with CPAs, the Center's Live Academy, once again, is February 9th through the 11th in Orlando, Florida. You can call 877-258-2837. We'll give you some more details in a minute. Here's some other tax-saving wealth planning and preservation strategies. Something called a legacy IRA. I'm not going to review them all here. The Roth IRA conversions, the charitable income tax saving trust, the options qualified plan strategy for large medical groups, the tax deductible charitable retirement strategy with wealth replacement trusts, tax deductible medical and dental reimbursement plans, private placement variable life and annuities, interesting marketplace for the family office, liquid asset plans for income and estate planning, private insurance plan, 831B captives, trust to save high state income taxes, people wanting to move assets to the United States. They could be foreign nationals, they might be US citizens with offshore assets that they're required to report their worldwide income. How about automated video content marketing? You can have access to videos that are customized to you and your firm, each of which are a minute and a half to 2.5 minutes, that can show up on their phone, on their iPad, on their iPhone, that have identification only to you, not to us. If you go to buy this product on your own, I'll tell you where it is. It's called Selling Technologies. You can buy this program for $300 a month or $3,600. If you're a member of ours, you get it for $100 a month. That's a 2/3 discount. It's everything from funding of retirement to buy-sell agreement to asset protection to estate planning, done with professional actors, professional recording information. It's really beautiful stuff. Automated video content marketing. You could market and remarket to clients and prospects every single month and have access to a scorecard as to who the people are that listened, what they were interested in, how long they watched and listened. You can also do exactly the same by marketing for your professional advisor network, attorneys, CPAs, financial advisors, and their list of clients and prospective clients over their careers. Remember, their clients say the same thing, only the CPA chooses not to listen. The only time you call me is when you want to charge me for something. Well, here's a way to be able to stay in touch and let people know that their professional advisor does have their best interest at heart. Would your prospecting be easier if you could do this on a continuous, ongoing basis, and all you've got to do is supply them with a list? They literally will do everything else. That's included in that $100 a month. And it doesn't matter what type of products, whether it be annuities or managed money or retirement planning or qualified plans, life or health insurance, long-term care, employee benefits, estate planning, or property and casualty. Doesn't matter. It doesn't matter what type of prospects. It could be high net worth. It could be business owners. It could be pre-retirees. It could be post-retirees, 401k qualified plan participants, or highly compensated executives or professionals. It just doesn't matter. It works with everybody. You'll find out some things work better than others. It depends on your personality and what your client base looks like. If you want to get better and you need coaching and mentoring, for some reason or other, our industry thinks that they don't need coaching and mentoring. And yet all great athletes, politicians, and business people have coaches and mentors, all of them. Here's an example. Here's Tiger Woods with his coach. Here's the what was the Oakland Raiders and their coach. Here's Jack Nicklaus and his coach. Here's, I'm drawing a blank on this coach's name, but baseball players, tennis players, track and field athletes, politicians, everybody has coaches, mentors, speech writers. Here's an example. In baseball, you have a batting coach, you have an infield coach, you have an outfield coach, you've got a hitting coach, you've got a pitching coach, you got a base running coach, you got a bench coach, and you got the manager. Only our industry, as I just got done saying, thinks that we don't need any coaching. I will tell you that my production has been 50% greater because I had great mentors in this business. As far as an athlete, I would have been a very good local player, and the reality was I wound up being the national and the world champion, and it was all because of mentors and the intangibles. And here's an example. For those of you that are baseball fans, you'll know what I mean when I say a 250 hitter. That means you get one hit out of every 4 times at bat, versus a 300 hitter, which is three hits every 10 times at bat. Well, the season is 27 weeks long, and there's an average of 6 games per week, plus 4 at bats every single game equals 600 at bats. Well, if you get 180 hits per year, you bat 300. The result is you make $20 million a year, and you've got almost certain entry into the Hall of Fame, versus 150 hits per season, which is a 250 average. You'll still make $2 million, but you won't get into the Hall of Fame based on that. It's 30 additional hits per season, which means one additional hit. It could be a bad bounce. It hit a rock. It could be if the infielder bobbles the ball and the scorer credits a hit. 30 hits, one additional hit per week, the difference between 20 million and 2 million. It's always the intangibles. It's never the tangibles. There's going to be 18 takeaways that you'll get at the Academy if you decide to attend, and I strongly say that you do. You're going to learn how to talk about reducing taxes in order to create clients, hardwired tax reduction plans prepared by experts, 3 ways to take over existing retirement plans that produce assets under management and insurance sales. Which is better, term or permanent? We've got a mathematical equation that'll solve that argument for you. A retirement plan that provides for more retirement income than defined benefit plans, and the income comes out tax-free. A retirement plan that provides health benefits that are tax deductible and tax-free. A lead system that not only tells you who has retirement plans, but how much is in them, what the current yield is, how much they're paying in fees, whether or not the yield and fees are in line with the industry average in their geographic area. Marketing and customized short video vignettes, digital content marketing done for you, pre-populated. A computer system that tells you which assets to access at what time and in what amount in order to maximize your income or your legacy for your children or for charity or any combination thereof. Exit strategies and qualified plans that reduce income taxes and estate taxes. A defined benefit retirement plan that creates guaranteed income, not projected. How to get doctors and dentists as clients. Strategic partnership with CPA firms and property and casualty agencies. 5 ways to convert IRAs, profit sharing, 401k, and defined benefit plans to Roth IRAs with only about 20% of the money out of pocket for taxes. Plans to stay away from. These are career-ending plans that we have a presentation being made on the things to stay away from that usually sound too good to be true. Expert resources to help educate you on sophisticated strategies, orchestrate engagement, and close business, and the SCI education and presentation. Southern California Institute, Joe Straszari. Once again, here's the center's superstar faculty. You can review at your leisure, but there is nothing that even approaches this group of people as a faculty or the program that we put together. So Hank Greenberg, who's the ex-CEO of AIG, said, all I want in life is an unfair advantage. And we think we've created any number of unfair advantages for you to be able to take advantage of. So what happens next? Well, you need a formula, and it starts here. Just remember, if you utilize our formulas, a little help can make a big difference. If you're making 150 a year, we can get you to 300 pretty easily. 250 a year, get you to 500 pretty easily. So if you'll join us at the Center Academy, here's the investment that you need to make. CTSR member, Center for Tax Strategies and Resources member, pay $495 to attend this event. There's some time frames involved with that, and that number goes up. The non-members pay $645. If you decide that you're going to join while you're at the event, we'll refund that extra $150 to you. For more information, call 877-258-2837, or you can email the center team at yourctsr.com. The center team at yourctsr.com. You can go to the website if you want to register. It's www.yourctsr.com. Under the upcoming events tab, you can click on it, and hopefully we'll see you in a month or two. Brad, you got anything you want to add?
Well, thank you. First of all, it's kind of hard to tell if you're excited about the center, Simon, because you covered about 3 hours of material in an hour. So thank you for your pace on that. That's one thing I was just going to comment on, because we've done several of these live events. It's one of the only industry meetings in my 35 years that I've noticed that people don't get up and go take phone calls. They sit wrapped to the speakers because there's just so much information that comes out, and it's things that you can go back and apply to your practice. I do have a couple questions, but I want to make one more comment before that. When you attend this event, it's so nice to be able to talk to the subject matter experts between the presentations and on the breaks. It's a really great sense of community for people who care about this business and want to get better at what they do. And quite honestly, it's a lot of fun for everyone, including us. So we really enjoy being together.
You know, Bradley, one of the things that I didn't say that's on here is we provide breakfast every day for the people that attend. We provide lunch. I believe it's on the first 2 days. Actually, it'll be the third day also.
All 3 days.
And we have a heavy hors d'oeuvre and cocktail reception on the second day, and I believe it's dinner on the first day.
Correct.
And all that's included in this cost.
Thank you for bringing that up. And why we think that's important too is that, you know, the program doesn't necessarily end when the last speaker is up. It's very, very nice to meet some other people in our business. The subject matter experts join us for a lot of these events, and it's a great way to get additional questions answered. It's just a wonderful way to really add to your understanding of what's available to professional advisors and how it can help transform your practice, kick you up to the next level. Simon, if you don't care, because you went so quick, there's a couple questions. You want to go through those real quick? I'll run them up.
Sure.
First one I'll handle. It's Diane from Atlanta, and she asks, how much are the dues if I choose to join? Thank you for asking that, Diane. Number one, if you go to the event and just spend the 3 days with us, you will come out with ideas and concepts that will add money to your practice. There's no doubt that that's going to happen. If you want to make what the center offers part of your overall practice, the dues to become a member of the center are $475 a month. Now, out of context, there's a lot of things that come along with membership that we just didn't cover on this. And on top of all of the benefits that are automatically included in membership, there's some really neat services. I'll just give you an example of one. We have a program set up with a nationally recognized tax attorney that will take your business owner clients 2 years of tax returns, do a complete analysis on what they may have missed, meaning their existing counsel may have missed. And seeing this firm specializes just in tax efficiency, they put together a report. They give it back to you, the advisor, and say, here's what we found. So it may be, you know, we found an $80,000 tax credit. We found efficiencies that would save your client $65,000 per year. And they will quote a price to fix that. They're not looking to replace their CPA. They're just looking, they specialize in one area. I found that to be huge in my practice because it just freed up a lot of dollars that I could use to solve their other financial needs, and it's just a wonderful tool. So that's just one example of what our members automatically have as part of it. We have some really fun things that can help grow your business. So it's $475 per month is the answer to your question, and you don't need to be a member to attend this. But you'll notice in future shows, if you are a member, it costs you less to go to these events. On top of it, there's also a 1 hour coaching session each month individually with Simon, and those are recorded. So you could, if you want to talk about a topic, you want to talk about a specific client, if you want to talk about how do I better market my practice, how does the lead generation system, how can I put that into my practice to get me in front of more people? It's your hour to spend any way you want. And then we do a lot of other monthly things with the members too. So anyway, that's the answer.
Bradley, let me interrupt. We've also got mastermind meetings once a month, with the exception of the quarterly meeting that we have. We have the quarterly meetings. There isn't anything even close.
Resource library that has over 2,000 documents that are white labeled that you can use for sending out to your clients on all kinds of concepts. There's a video library of all of the things that we've done with the members over the last couple of years that you can go back. So if you wanted to figure out, well, how do I put life insurance inside a defined benefit plan to increase the deduction for the client, you can go back into our video vault that's available to members on our website and watch an 1.5 hour presentation with notes. So there's just a lot of things. We're happy to talk to you about it. If you want more information on that, call 877-258-2837, or you can email us if you prefer at the center team at your CTSR, and we'll answer those questions for you or give you some more details. One other question that came in, Simon, Brian from Cedar Rapids asks, am I able to bring, or do you think it's a good idea to bring a support staff with me from my office to Orlando?
Well, that actually becomes more valuable if you become a member. If you're coming by yourself, you know, one of the problems that staff has is every time one of us goes to a meeting, we come back with a whole bunch of new ideas and disrupt the office in total. So you might want to bring them, you might not. I'm not sure what you would do with them without being members, because you're going to hear a whole bunch of stuff that you'd like to be able to do and not have the resources to do it. So
I would say
I don't
I
know how
would
to
say,
answer.
if your support staff's like a paraplanner, that might make sense. But as
Yeah.
far as an admin, probably not so much. Last question we have time for. And by the way, those of you that we didn't get to your questions, I apologize, but we will reply to them in writing. Ellen from Camden, New Jersey asks, is your CPA program complete with everything, including scripting? I think what she's asking for is, do you take the guesswork out of how to build those relationships?
Well, we spend a lot of time on conversational presentations because they need to be fluid. So you can have a script, but if you just stick with the script, you're probably going to find yourself out in left field someplace because it needs to be responsive to how it's being responded to and in what tone it's being responded to. You know, we've tried to do virtual meetings with audio only, and I will tell you, you lose all kinds of identification keys when you can't see somebody. So just having a script is a nice place to start, but getting conversant in how to be fluid in your conversation, how to ask questions as opposed to make statements is incredibly important. But the answer to your question is, yes, there are scripts, there are brochures, there are agreements, all that stuff is available and is included, but you still have to become masterful at how you do the interviewing and how you have the conversation. Because just because a CPA raised their hand and said, yes, I'd be interested in becoming fluent in financial services, that doesn't help us. They sometimes think they can do it on their own. So it's our job to share with them that, yes, you can do it on your own, but you can do a better job if you sit on the side of the table with the client and help them analyze what's being said and what's being discussed. Because if whoever makes the presentation, whether it be me or the CPA or Brad or you, whoever makes the presentation is going to come under scrutiny. And the client is, when the salesperson leaves the room, the client is going to want somebody to talk to. They might go talk to their CPA. Their CPA is going to say something like, oh, you know, we can handle that for you. Or they might go talk to their wife's brother's hairdresser's uncle who walked by a financial services office one time and asked their opinion. And verbally, everybody can do a charitable remainder trust. Everybody can do a grantor charitable lead trust. Everybody can do a family limited partnership. It's how you take those pieces of the puzzle and put them together efficiently to create a whole that's greater than the sum of its parts. So we would like to be able to control who they go ask. And if I leave the room and the CPA has been educated correctly, when I leave the room, the client's going to turn to the CPA and say, what do you think? Controlling the controllables, controlling who they go to ask. If they go to ask the CPA and the CPA is in a strategic alliance with us and we've done a good job of educating the CPA is going to, in good conscience, be able to say, based on your facts and circumstances, I think it makes perfect sense. Or based on your facts and circumstances, I'd like to get more information on that. Will you authorize me to do that? So knowing how to be fluid in the conversation is far more important than knowing the answer, because the answers are a dime a dozen. I can hire smart all day long.
Yeah, absolutely. Well, that's excellent, and I think you've more than answered that question from Ellen. So thank you for asking. With that, we're going to put an end to the webinar here. Again, you do not want to miss Orlando. It is going to be an amazing 3-day program. Get to meet and rub shoulders with some of the best people in our industry, get a lot of ideas and concepts that will help make your 2022 substantially better than 21, and we would love to be part of that for you. So more information, give us a call, 877-258-2837, or email us at thecenterteam@yourctsr.com. Again, if you go to our website, just type in, you can type it all out, but it's better to just type in yourctsr.com, www, and you'll see an event tab, and all the information will be up on there for getting registered for Orlando. By the way, you might want to move quick on it. It's been a while since we've done live shows. We were doing virtual. The demand's been really good, and because of spacing and everything else to be smart in Florida, we're going to we have a limit to the number of people we can get in. So get yourself registered, and we will see you in Orlando. Kick your year off with something very, very positive. Thank you,
One
Sam.
last thing, and just so you know, we're going to be COVID compliant. Florida is easier than California is, for instance. But if they're going to demand masks, we're going to demand masks. If they want testing, we're going to want testing to try to make things as safe as possible for people.
All right. Well,
Okay,
thank you, Simon, and we will see you in Orlando.
sounds good. Take care.